Have you ever scrolled through social media and seen posts claiming that up to 16% per annum gain with gold schemes? These promises of high returns can be quite alluring, but who is actually making these claims and what products are they offering? Before you jump in, it's important to be aware of some hidden risk. We shall cover all these aspects in this video. Welcome to holisticinvestment.in. What is Gullak Gold Plus? Earlier this year, fintech company called Gullak introduced a new offering called Gullak Gold Plus. So what exactly is Gullak Gold Plus? It is a gold leasing program facilitated by Gullak in collaboration with Augment, a gold refinery. The concept is straightforward. Users can lease their gold through the Gullak app, but what does leasing gold mean and is it truly beneficial for you? Gullak Gold employs a leasing model where your gold is leased to partnered jewelers. You earn a base return from gold appreciation, historically around 11%, plus an additional 5% for the lease. The alluring 16% return claim. The bold claim of up to 16% return per annum is based on two components, an 11% historical return and a 5% lease gain. While this sounds impressive, there is more to consider. Gold, like any other asset class, experiences market fluctuation and does not consistently provide an 11% return each year. The 16% return claim is more of a marketing strategy than a guaranteed outcome. It is crucial to understand this before getting involved. Is Gullak Gold trustworthy? Can I trust the Gullak app? Is the Gullak Plus app safe? These are the questions that comes into your mind when you first heard about this concept. Gullak states that the leased amount is secured by bank or corporate guarantees with the guarantee equal to maximum leasing quantity allowed to a jeweler. A guarantee typically comes into play when a jeweler fails to pay the lease or shut down or does not return the gold after the lease period ends. However, a bank guarantee does not ensure full and timely recovery of losses. But what happens if the price of gold suddenly rises and the value of the leased gold exceeds the guarantee amount? In such cases, there is a risk that jewelers could default on their repayments. Recovering your gold would then depend on the guarantee or collateral, which might not cover the full value. Additionally, enforcing a bank guarantee can take time, meaning you might not get your gold back when you need it. Imagine the stress and anxiety of watching gold prices soar while being unsure if your investment is safe. The pursuit of high returns can easily turn into a nightmare of losses. Next, what are the risks of gold leasing? First, counterparty risk. If the jeweler defaults on the lease or goes bankrupt, you could lose your entire investment. There is no guarantee you will get your gold back. And Gullak's 100% bank guarantee only applies to the base gold value and not the promised returns. Next, transparency issues. Gullak doesn't disclose their jeweler selection process. Are these reputable businesses with a good track record? Without transparency, it is impossible to assess the true risk of default. Next, the biggest red flag, lack of regulation. The most significant risk in Gullak Gold Plus is that both digital gold and gold metal leasing are not regulated in India. This means there is no regulatory body to protect your interest if things go wrong. There are no guarantees for your capital or returns. If you face any losses, you are on your own. Are you willing to gamble your hard-earned money in an unregulated market? The dangers here cannot be overstated. Then what should you do? Given these factors, it is wise to steer clear of gold leasing products like Gullak Gold Plus. While Gullak Gold might seem like a shortcut to gold riches, instead consider more secure investment options such as gold ETFs, exchange-traded funds, gold funds and sovereign gold bonds. These are regulated and offer a safer way to invest in gold without the high risk. Do not let the allure of high returns cloud your judgment. Stick to investments that prioritize security and regulation. Sovereign gold bond versus Gullak Gold Plus. Understanding the differences. Both SGBS and Gullak Gold Plus offer way to invest in gold, but they differ significantly in terms of risk and return. First, SGBs, the safe haven. Government backing. SGBs are issued by the Government of India, providing a layer of security and stability. This minimizes the risk of default compared to Gullak Gold's reliance on partnered jewelers. Next, guaranteed returns. In addition to gold price appreciation, SGBs provide a fixed interest rate, currently approximately 2.5% paid semi-annually. This guaranteed return offers a buffer against market fluctuation. Next, tax benefits. SGBs offer tax benefits on maturity if held for 8 years. Long-term capital gains tax applies on profit if sold before maturity, but with indexation reducing the tax burden. Gullak Gold Plus, higher risk, higher potential reward, potentially higher returns. Gullak Gold Plus boasts return of up to 16%, which can be significantly higher than SGBs. However, this return is not guaranteed and depends on gold price appreciation and the jeweler fulfilling the lease agreement. Next, leasing risk. Gullak Gold Plus leases your gold to jewelers. If the jeweler defaults, you could lose your entire investment. SGBs eliminate this risk as they are government backed. Next, less transparency. Gullak does not disclose their jeweler selection process, making it difficult to assess the risk of default. SGBs offer complete transparency as they are government issued. Next, regulation uncertainty. Gold leasing through fintech platforms is a new area with evolving regulations. SGBs are a well-established investment with clear regulations. Understanding these differences can help you make an informed decision based on your risk tolerance and investment goals. Choosing the right gold investment for you. If you prioritize security and guaranteed returns, SGBs are the better options. They provide a safe way to invest in gold with some guaranteed return alongside potential price appreciation. The final takeaway and thoughts. Gullak Gold Plus offer an attractive return, but the risks are significant. Before you invest, weigh the potential reward against the very real possibility of losing money. Consider safer, well-regulated option for your gold investments. Remember, chasing high returns often comes with high risk. While the idea of earning a high return from your gold might sound appealing, it is essential to look beyond the attractive numbers and understand the risk involved. Greed for high returns can lead to significant losses and regrets. Always prioritize security and regulation when it comes to your investments. Stick to safer, more reliable option to ensure your hard-earned money is protected. Do you really want to take a gamble with your gold? Think twice before jumping into the scheme that promises the moon but could leave you empty-handed. Your future self will thank you for making informed, wise decisions today. A detailed blog post on this topic is available on our website, and check the link in the description. If you have any questions related to this or any other investment option or related to your financial goal, don't hesitate to book a free appointment with our financial planners. The link to the free booking is given in the description box below. Also, will you be interested to attend any insightful investment webinar? Then feel free to register for the upcoming Enlightening Investment Webinar. It is completely free. The registration link for the upcoming webinar is also given in the description box. If you like this video, please give us thumbs up. Also, share it with your social circle. If you haven't subscribed our YouTube channel so far, please subscribe now.